Good evening. This is the Elliott Wave update for the Nasdaq 100 and the S&P 500 for Wednesday, June 28th, 2023. The process of working our way towards the end of the second quarter continued. We did have a lot of macro buying and selling today. Mostly to start our session was the macro buying. Then we had one quick duck down, and then the balance was again just working our way back up higher with a couple of sell-offs in between. So this entire process of position adjusting, as I've described before, just moving in and out of positions that they no longer want to hold or they want to build into, et cetera, et cetera. We did have some additional movement in the chip stocks today as news about the possibility that NVIDIA and other chip makers might have some trouble exporting those chips and getting them back into China. That was the story. It did have a downside effect, was overcome at one point, then it resumed at another point. So the market continues to be what I would call kind of squirrely, and that we're jumping higher, we're flying lower, and even the inside our hours here, it's not and has not been still the easiest trade to take and to hold on as a day trader. Nonetheless, there were opportunities today, and if you could hang on, they did pay out. So where are we with regard to this small Elliott count that we have going on in terms of minor wave 5? I'm continuing to consider Monday's lows at 14,853 to be the low of minor wave 4. And then today, it does seem pretty much that we cleared and cleaned up and put in the first wave up. And that's going to be a minute wave 1 of minor wave 5. And as I believe I may have described, if not, once we got that high of minute wave 1 in, then the anticipation or the expectation would be that we would drop within a wave 2. Well, we hit that high and it turned immediately and dropped, and not quite to session lows, but it started to get close. And so what may be going on is we're still inside this small minute wave 2. And these are the support levels for that wave 2. And thus far, we've now dipped just below that 0.382. More common for a second wave would be 50% to 62%. And those levels are 15,036. And the next one down is 14,993. So to have a quick drop back down, this would be A, B. We get a nice C wave down and get down closer to 15,000. That would tie it up nicely in a bow. And we could get down actually just this low, and we'd be within that fourth wave of one lesser degree, which is the minuet. And that's all right here. So that would be the fourth wave. Wave 5, looking for a wave 2. It could come down, which is going to sit in between the 50% and the 62% retracement. Fits pretty tightly, fits very well, actually. So we'd be looking for a 5-wave structure down, likely not so clear on the hourly chart. We'd have to probably go down to like the 30 or even the 15-minute chart to finish and put that count in on the way down. Our moving averages, 200, pretty flat all day long, even with those nice rallies that we had, and the declines just kind of canceled each other out, basically. So we got a nice flat day. The 20 did slip and now is moving back above the 200, which continues to support the rally continuing. The 50 continuing to inch its way higher, needs to get back above the 200, and then we would be in sync for that continuation of that move higher. Now, upside resistance we will be able to add to it. Once we do get a low for wave 2, I can put in some extensions for what we might look for in terms of a third wave. And again, if we start to break above 15,219, 220, that was today's high, then this low here would be the wave 2 low, and it came in real quick. And now we're off to the races. Although the pattern here, yeah, kind of suggests it's a B wave. And then we're going to get a C wave down to finish wave 2. Again, looking for this particular zone in here to come through for wave 2. Once that's in, I will be able to put in the retracements. We'll get rid of these. Retracements would show us the path most likely for a continuation to the upside and a third wave. So again, everything continues to be in line. Not the easiest day to trade, but hey, I've seen worse. Over in the S&P, kind of the same story, a little bit different of a structure. Still minor wave 3 complete there. Minor 4 complete also on the 26th. So last week. No, excuse me, Monday. So Monday's low exactly also for the S&P put in that minor 4th wave. So we can kind of bring it out to here. We can take a look at what the inside looks at. It's basically the exact same pattern. But we had tons of tails of soling, buy it, sell it, buy it, sell it, buy it, sell it, buy it. So a lot of tails here. So the anchor was actually the 200 and the 50. That was the attractor, the hold support level. We dipped below it slightly this morning early. So we did put in a little bit of a new low in the openings and then managed to get below it again to a low at 43.99 at the 10 o'clock hour. And then once again, didn't necessarily break, but we got dang close at the noon hour when we got that, we reached our top and we came back down in a wave 2. Now, what can wave 2 look like? Well, we can put our fibs in and we've reached the 50%, but that kind of came after the fact. So we still can get a rundown back towards that 4,400 level and maybe just dipping down below it to 43.92. Those are going to be the two support or the support area. And right now, we did get a decent close above the body of this candle. So this would be the extreme. And again, if I take a peek and we look at the close, the line chart, we've exceeded. So wave 1 might be all the way down here, wave 2 done, and now we're off in a third wave. We're going to wait and see. We're going to wait and see. Because if I put it back on the candle, we do have the room where this could stop, turn, come back down, get itself down into this zone. Here's that 4th wave again. So coming back down to 43.99, just dipping below, will put us into the 4th wave of 1 lesser degree, which is right here. So that makes it nice and clean, bringing it down, and then sets the stage. Put an A, B, C, bringing it in here, and then we start to rally with a little bit more intensity, actually. And as we get closer to Friday, so we have 2 days, right? We have tomorrow, we've got Friday. I would be expecting that we might put in a very decent rally tomorrow if we're going according to plan into what the wave pattern basically continues to need. So that would be a strong possibility. At some point tomorrow, we actually catch fire, or it could be overnight. We have to wait and see how they want to do this. But we catch fire and we just kind of just start to rally, and it just gives us that strong push. Otherwise, what we're really going to be associating that with is like macro traders coming back in on the buy side, loading up on what they need and what they want to put out there into their portfolios in anticipation and preparation to go into the third quarter. That could take us really up higher. I continue to look for upside. So as long as the wave pattern stays consistent with the move that's in progress, I will have no reason to begin to switch to say we're not going to reach above 4,500. That still is in my picture. I know, I guess yesterday it may have sounded a little bit more bearish, but I don't consider myself either bearish or bullish. I'm just kind of calling the pattern and what the expectations of the follow-through on that pattern would be. And that would be that we get ourselves back up above 44.94, which is the current high. For that minor third wave, we need to put in a new high above that. Let's get through the next couple of days to see Maybe it'll take a little bit longer until we actually start moving in to the third quarter. Maybe it takes right up until we start to get earnings reports, which are mid-July. So again, a lot of things get tossed around, a lot of things get into the wind here. Other thing to bear in mind, although we do have that quarterly expiration on Friday, so I would imagine we probably stay kind of busy, kind of. Put quotes on that one. But then Monday, markets are open, but Tuesday's the 4th of July holiday. I would imagine a lot of traders are taking the long weekend. It's the summer. It's time to take the long weekend. Go out with the kids, take them on a little bit of a holiday, go skiing, do whatever you're going to do. You know, head to the water, head to the lakes, head to the hills. So I would imagine that we might have a slow day on Monday, but if there's enough to do under light volume, could produce some bigger moves. So it could be worth trading. So once again, let's take a look at the moving averages. We do again have the attractor, the support. Now we've got the 50 period sitting right against and just popping its nose above that 200, which remained pretty flat all day. That attractor was 4,400. Came down, came down, came down, but bounced off, bounced off, bounced off consistently all day long. I would imagine that continues to be an attractor and support. Slight break below, not going to be severe going down to 43.92, but it fulfills the task of finishing a wave 2. If we break above 44.29 or 44.30, that begins to put us into minute wave 3, and I would be more than happy to put a minute 2 right there, and then we start to develop the next 5 up to put in minute wave 3. That's where I am going to complete it for today. No need to really go in and out and talk about anything else that's really going on. We basically have covered it. The bond markets are continuing to do what I feel that they need to be doing. They're working through also a very difficult period. We're kind of waiting for these auctions of the different levels of we have the 30-year bond, we've got the 10-year note, we got 5-year note. That was today. How are they going to be received, how things are going to get priced so that the markets can begin to price themselves. And then we take a look at that inverted yield curve, and has that continuing to point in a direction that is not favorable to the market. More on that maybe over the weekend. In any case, that's going to be it for today. Our next update will be on Thursday, June the 29th.